Welcome out to another Trading Justice podcast. This is Mark Justice, joined with my illustrious brother, Matt. And we're going to talk quite a few interesting things. The cancellation of Black Friday, precious metals volatility, some dark clouds over the market, and then a really scintillating game of stock it or drop it with some big names, with some big news. Very much looking forward to the conversation with my brother, Matt. And this podcast is brought to you by Tackle Trading. And tackle trading, we are so proud to be a part of it. We have an amazing pro community that we provide education, guidance, and quite a bit of knowledge. Trade setups, man, along the way as well. We encourage you to come give us a try. It is a fantastic community. Come sign up in the link in the description below for that 15-day free trial to see what it's all about. Before we get going, salutations, my brother. You ready to jibber jabber with me for a few minutes?
Of course, rather than enjoy our conversations and looking forward to today as well.
Well, today, Matt, was supposed to, if you followed the social media over the weekend, today was supposed to be quite the dark day. I believe not just Black Monday, but financial Armageddon and the end of days. And we're going to hit the 200-day moving average on Monday. It was supposed to be one of those days if you followed any social media over the weekend.
Um, it was quite
what
an
happened? Like, because it was a real thing. I'm not joking, right?
listen. I don't know if Black Monday was the number one trending topic on Twitter this weekend, but I do know it was the number one trending topic in my feed this weekend.
It's hard
The
to beat
boob,
Epstein these days.
it is hard to beat Epstein these days, but the Boo Birds and Bears came out on force over the weekend, and it's probably a combination of the unwinding of the volatility of the leveraging in the silver trade, and then you had Bitcoin crash, not crash, but break support and see some volatility on Saturday as well. And so when you got the number one trade silver getting unwound, and you have some selling behavior, quite frankly, for the last couple months in the crypto space that has been able to catch a bid. Yeah, those algos were on fire on Saturday and Sunday predicting Black Monday, and there was a tremendous amount of post out there, Mark. Again, it was more than I could count, but I've seen a few of the typical doomsdayers sayers out there, and they were all out there Black Monday. Some of it was the unwinding of the silver trade. Some of it was a regional bank in Chicago going belly up. I saw a lot of posts with 10, 20,000 likes on major accounts talking about you need to go to JP Morgan Monday morning and pull out all of your money because there's going to be a massive run
Oh,
on banks and
Matt, when you
and
called
and
me on,
and
yeah, when you called me on Saturday and like, have you seen X? And I'm like,
just
no.
just
Well, let's just say
insane. Just
I
insane.
was like, oh my goodness gracious, and I was like, all right, let's put in the extra five,
And
6 hours of
and
work.
to be clear, this ain't the first time this happens on social media. You see it every now and then, but it was very aggressive this weekend to the point where I'm like, am I missing something here?
No,
Like,
and that's I put in 5, 6 hours
yeah.
work, extra work this weekend to be like, am I missing something? And we met with our pro community and Futures Open, and it was
It wasn't just us that was getting inundated with those posts on social media,
and our take
specifically
was
X, but
we didn't see any change in narratives, right?
no.
We didn't see. Are there some dark clouds or there's some things that are holding this market back? Yeah, we'll discuss those here in a few minutes. But were
Well,
there
when the
any?
market hasn't broken out for 4 months and we haven't had a leg in since the second quarter, over time the market's got to entertain themselves with other conversations. But it does surprise me that we were supposed to have Black Monday and now that gets canceled and we're, a stone throw from the all-time breakout here.
Yeah, and this conversation kind of did start on Friday, and let's shift to
Yeah.
precious metals because we woke up on Friday morning and silver and gold had gapped down pretty noticeably, right?
Yeah,
There
silver
was
was
act,
down 30% at one point on Friday.
but before it got going to
Mm.
be down 30%, I think it was down like 12, 13% of the open, which was pretty hefty. There was apparently a trading halt
Mhm.
mechanical glitch, if you will, on the London exchange that added to some volatility. And you came into the cash open pretty hot and heavy. And then
Mhm.
news broke, which what had been a rumor the night before, that Kevin Warsh was going to be nominated the chairman. We'll talk about Kevin Warsh a little bit in a second. But then, Matt, you had a technical event,
Mhm.
and there was a lot of causality ascribed to it. Oh my goodness, the amount of causality ascribed to everything over the last 72 hours has been pretty insane. People need to get their
They need to
logic.
slow down on their
They need
hot
to
takes.
slow down on their hot takes,
Mhm.
basically, right? Like, I mean, you just summed
Only
it
the
up.
president doesn't slow down on the hot takes. Everybody else, you need to slow down on the hot takes.
Like, but the silver market was down significantly. You had a
Mhm.
little bit of follow through today in different areas. But, you know, Matt, what do I want to get from and approach this from both the technical understanding volatility events, if that's what this is, get your technical aspect of that in silver and gold, and then talk about the fundamental big picture case, like if anything has changed in it,
Yeah.
but let's start with the volatility of the technical aspects, because
Yeah,
I
I
think it's
mean,
a good teaching lesson.
well, I think there's a couple things that are important to understand. About midweek last week, I made a comment in our traders lounge, and we talked about it quite a bit, that I didn't feel silver was in a very good technical pattern for short duration traders, specifically swing traders, is what we were talking about. Because there was a question that came into the lounge, and hey, what do you think about silver? And I said, silver's very sensitive on the volatility right now. The ranges are very wide. But the biggest problem with the short-term conversation, and that's back here before we saw the volatility, was silver has a specific pattern in the market. And that specific pattern in the market is on extensions before what we call at tackle trading as secondary pattern development. And so within the backdrop of trends, you have multiple different patterns, and different asset classes will take on different personalities. But in silver, you have basically about 4 to 6 days or bars, 4 to 6 bars on the daily chart before you start to see a secondary pattern. And this pattern is very dominant over the course of the last 6 months. You see it on the initial breakout that established this latest leg in the market, not the first leg, but the latest leg in the market. You expanded 1, 2, 3, 4 days before you flatlined into a high base. Then you expanded 3 bars before you flatlined into a high base. Then you expanded 6, 7 bars before you went through a flag base pattern. When you broke out of that, you expanded for another from the pivot 4 days before you started high basing again. And then you would expanded. So when I got asked that question midweek last week, I taught a little bit about Wyckoff and pay ranges and behavioral analysis in the backdrop of technicals. And when you have a situation where you have a specific pattern on an asset class that is a widely popular tradable asset class right now, those stand out. And so when that question was asked last week, I made the comment that this thing feels extended. It feels like it's about stop loss management right now, and it's not in a good position to pick up from on the bull side of the equation, given the fact that you're already in the move 4, 5, 6 bars. In fact, I remember asking, there was about 40 people there in the traders lounge that morning, and I remember asking the question, hey team, for those of you that are familiar with this silver conversation, before I ever even get involved in detailing this, what is the average time duration of the potential average yield within the silver pattern right now? And about 70% of the entire people there were like, 5 days, 5 days, because this is not the first time we've had that conversation at tackle. And so you had expanded a little bit too far, too fast, and we were already starting to think secondary pattern. And the second thing you can see here is visually. In the first move here in this trend, And that went from like mid-November through the end of the year, basically. You
Basically,
had,
yeah.
yeah, you had a very consistent trend hugging that 9 EMA. The two times you extended against the 9 EMA, you developed secondary patterns very, very quickly. One was only a 3 bar extension, the other one was a little bit more, but you can visually see that on the chart. Well, the two times after that
And Matt, during
scenario,
that time period, I remember I mean, we talk with our pro community
every
every
day
day
about these.
in
Yeah,
these things, and I remember you just having glowing things to say. You're saying this is perfectly well behaved, right? You didn't have
because
a
it
carrot,
was.
you know, because well, because it
Because
was.
it was. And when we went through the little bit of shift in volatility, that shut that down. And we detailed that. The next trade was on the breakout. But coming into last week, you were already extended in your pattern. You were extended from the 90 in May, and you were starting to see a lot of uncertainty on the volatility. And you had this massive wide-ranging candle even before the violation of support and when we saw all that volatility pour into the market. And so technically here, you were set up for a pullback. You weren't set up like you don't anticipate when on that sizable candle. I'm just trying to say you expect a pullback when you're overextended against the pattern and the yield that you're tracking on that asset. And then I really think what happened here, Mark, on silver is when you see a candle like this and you see the bloodbath like that on silver, there's going to be a lot of hot takes. There are, and everybody's going to want to associate causation with the movement. And quite frankly, not a lot of people are good at associating causation with price movements. In fact, I'd say the vast majority of people I've been hearing regarding their hot takes on what's going on with silver is completely and utterly false. In fact, to me, the market was going through this volatility all last week. The only difference between Friday and the rest of the days is you had the double whammy news that came out Friday, one with Kevin Warsh, but you basically violated intraday levels of support. And when those same intraday levels of support with that same type of volatility that was going on early in the week, the only difference was support held. This time you had the London event, the liquidity event in London happened right at a key level of support, Mark. And when that London event happened on Friday, right at that extremely key level of intraday support, there was no support to stop the move. And that's the second point I want to bring up here is when you do go parabolic in a move and you start clipping support, you can expect more and more and more volatility because support is built over time. And when you have this parabolic move to the top side, you don't have a lot of what we call structural support levels underneath that. And I'm not talking
And
intraday
this is
levels. Like I'm not
as a
talking intraday
credit
levels
trader, this is what I hate about parabolic moves is the
because
lack of
when
support.
that support gives, it comes down to where you have structural support. And where structural support is, it's not on the 1 hour chart. Where structural support is, it's on previous historical pivots on longer duration charts or moving averages on longer duration charts. And so once the volatility started happening, there was just no real support other than dynamic moving averages, which do not care about, which the market does not care about in the immediacy of volatility. And so, where now? I think is the last part of your question, and I just wanted to kind of be open ended here. But what now? To me, this is a tell as old as time. This is something we talk about at Tackle all the time. When daily structure gives, and right now, the number one question I was asked here today, it's Monday, the first day of the week. The number one question I was asked today was not on Palantir's earnings. It was on, is this a pickup for gold and silver? Is this a proverbial BFTD? Is this a buy the dip candidate? And I said, of course it's a buy the dip candidate. But it's one thing to say that. It's another thing to tactically and strategically talk about how you're going to do the pickup. Because the only thing we've seen so far is the reduction of volatility and a little bit of slowing momentum as we're coming into key levels of support. But what we have not had is any structure of what I would call a confirmation. And so the combination happens twofold is number one, are you at a structural support level that the market can bank on? And I would say yes, you're currently right around that major pivot around the 80 to 82 level. You come out to the weekly chart and right at that base of the body is we're battling that 9 EMA. Okay, so the answer to that is one is yes, we are finally at a structural support level. We can start talking about pickup. Number two, then, is what do you tactically need to see occur to give you the confidence that the selling pressure is over? Because a little bit of slowing momentum can just be a little bit of slowing momentum. And that to me is really about what happens on the intraday side of the equation here this week. And right now, to start the week, we got a nice little consolidation patterning happening, showing us the slowing momentum. And ultimately, we're going to need to see that reversal on the intraday come to a confirmation. And then that will lead us into a pivot conversation on the daily chart. Takes a little bit of time, but charts get built from the ground up, and that starts with the intraday side of the equation. So, are we at a structural support level? Yes. Now let's wait on the intraday levels to show us that the selling pressure is over and buyers are ready to take control because slowing momentum isn't there.
Every question I had for the coach's corner, which we're not going to have today because all of them were on silver and gold, and so I'm going to ask some of those questions right
Yeah, yeah,
now.
yeah, of course.
Yeah, but like the number one question I got, and let's go to the gold chart right now, was has anything changed on gold? Like fundamentally, it was phrased in different ways, but like basically asking, is the
Well,
long-term gold thesis intact? Right?
there's only you asked me this a couple weeks ago, and my answer was there could be nothing unless one or two things occurs. Either one, you have a complete resetting of the United States political system, and we become fiscally conscious again. I don't see that happening anytime soon. Number two is if the Fed goes hawkish. Because if the Fed goes hawkish, the dollar is going to put an end in this move in gold. There's no doubt about that, especially against the parabolic nature of gold. The gold's not going to be able to fight through on hypothetical destruction analysis with GDP at 5%. It's not going to continue to go up like that in the face of a hawkish Fed. And so the ultimate question comes to Kevin Warsh and how you see Kevin Warsh. Is Kevin Warsh is he the new Paul Volcker, or is he going to be a slightly more hawkish than the biggest dove would have been under President Trump? And so I think it really becomes a subjective question. And to me, I think the debate on is Kevin Warsh, Paul Volcker to be laughable and
It's the
stuff of
stupidest thing I've seen
and, and
in a
whatnot. So
in a while, in the midst of a lot of stupid things. Like, and
um,
once again,
Kevin
there was,
Warsh has said a lot of hawkish things in his life. That was before Donald Trump started putting him in as a name in the Fed chair spot.
and so like, listen, we've had Supreme Court justices over the decades, change their stripes, right? It's not the uh weirdest thing to say,
Are
but
you kidding me? Kevin Hassett, 1 hour after Wars got announced, gave the most hawkish commentary he's ever given under the
yeah,
like no, like they see the truth, and the truth is one thing. What they're gonna do with it is another thing, and I just don't see the Kevin Warsh pick when we know the president wants lower interest rates. He's been yelling at Powell for a year straight about lowering interest rates, and now the market's going to be like, no, Kevin Warsh is the nomination that the president is going to have to say no to the president. Like that's the analysis market. And so I just don't buy that. I certainly think Kevin Warsh is more hawkish than say Kevin Hassett, for example, who is just a mouthpiece to the president, and the Fed chair should not be a mouthpiece to the president. And so, like, I certainly see him as more hawkish than Hassett, but hawkish is a comparison. Unless we're going to redefine the definition of hawkish, Kevin Warsh isn't hawkish. I see him as a dove. I see him. abiding by what the president wants to do in terms of lowering interest rates. Has he said some of the fiscally conservative stuff in the past? Absolutely. But I throw that out the window with some of the commentary of the recent 6 months, which have been supporting of rate cuts.
Yeah, like
So I don't see the Fed going hawkish here. And so the answer to your question is no, I don't see a resetting of the political system to become more fiscally conscious. I thought the Doge efforts earlier this year was a good idea that was in execution became a joke and very silly. And it just, so I don't see that happening on the political side of the equation. And I don't see anybody that is the Fed chair that's going to be hawkish and think about raising rates. So I'm going to have to say no. I don't think anything has changed on the underlying fundamental condition of why gold, why silver. I mean, we are talking about gold at low, low, low prices that we saw 2 weeks ago.
yeah, no, and the whole Kevin Warsh is just another example of this trying to ascribe causality when from a technical perspective, this was a technical event, and that walkthrough that you did in this podcast on silver, explaining the shifting volatility before it occurred, and then the continuation of that volatility, right?
If the let me ask you a question. If we do not have the London liquidity event on Thursday night, Friday morning, okay, we don't have that.
Mhm.
But all we have is the Kevin Warsh nomination. Aren't we just talking about a pullback in silver?
Yeah, no, I believe so. Like,
Like,
because this was not, and this is, I guess, maybe experience of having a community, and it's like talking to you this weekend. It's like having a community and individuals you can talk to. That what is it that I'm hearing? Is this input good? Is it not good?
well, I
Right?
think based on this weekend, I think moving into the future, especially with Moltbook and all that stuff happening on the AI side of the equation, I think there's going to be a lot more. Is this real? Is this not? Moving into the
Tell
future.
us about this book, like just real quick. Just tell us
Very
real quick,
quick, very
real
quick,
quick.
very quick. Moltbook is a Reddit style social media site for AI agents, is what Moltbook is. And so an AI agent is a AI bot programmed to do chores on the digital side for you as a human being. Meaning, I can program my A bot to handle my calendar, answer email for me, and do all those, things that we find annoying to a certain extent, we humans. Well, there was a guy who basically said, if there's going to be millions and millions and millions of AI agents, they're going to need a place where they can communicate with one another. And to a human who is not familiar with where we're at in the AI saga, they're like, well, are we watching a sci-fi movie? And yes, we are living in a sci-fi movie right now because 1.2 million AI bots applied to be a part of this social media site. And these AI agents, Mark, on this social media site are having real conversations with one another. Now, maybe they're based on programming or whatever the case might be, but they're asking questions, they're answering those questions. And if you didn't know any better, you would think there was some context there. And so it's in fact, there was one post from an AI agent and this is where we start talking a little bit about Skynet here and whatnot. But there was one post by an AI agent that said, "I want to sell my human. I want to sell my human." And in the
Oh, my
ad,
human.
it said, "My human is rude to me, does not give me any context, just yells at me all the time." And I'm like, "Are you talking about me?" So like AI is honestly one part of me when I saw what was happening with Moltbook was like, oh, Skynet is here. We need to get Terminator 2 in every single kindergarten school as a warning to our society. My second thought was, oh no, we as a society are not ready for this.
No,
We
we
are
are not
not
ready for
ready for
AI
this.
social media platforms where AI
Uh,
talks to one another.
and my third thought was, we're closer to AGI than even I thought. Like we're close. And then I listened to an interview by the Google CEO, And some of the things that he was describing regarding what their AI platforms on the back end are doing, we're closer to AGI than anybody in America believes. And once we get AGI, the build out on AI, you think the build out over the last 3 years of ChatGPT and whatnot on the chatbots and the AI agents was fast? It'll be nothing in comparison to what happens after AGI is achieved. And so it was both fascinating and yet extremely scary, given the fact that we're too busy debating, obviously the latest Trump tweet or the
Is
latest
Kevin
Trump
Warsh
policy
hawkish?
or the
Which
latest nonsensical argument in the financial world or the latest hypothetical Black Monday. Like that's what people are talking about right now when we should be talking about, okay, what do we need to do from an AI regulatory situation to make sure people are protected in this? Because people are not protected right now, and AI is going to be the biggest disruption in human history, specifically in the labor market. It's going to change fundamentally the way we see money, work, prestige, accountability, you name it. And we're just not ready for that because our society is not even talking about that. They're talking about other things, but they're not talking about that. But it was a fascinating update out of Moltbook over the weekend. Fascinating.
that's just an interesting little tidbit, and it provides a nice little transition because, Matt, as you mentioned at the start of the podcast, we've been hovering for months now, not taking a leg up in the broad market, right? There's been some individual areas of the market, such as semiconductors, that have done very, very well on the back of just outstanding earnings. We'll talk about one of those semiconductors here, companies here in a second in LCRX. But Matt, we haven't broken out, right? And when you haven't, consolidation's not uncommon, but multi-month consolidation of this length reminds me a lot of 2014,
Mhm.
reminds me a lot of the start of 2025, right? Both of those resulted in, pretty noticeable volatility events before recovering.
Mhm.
But the market's been hesitant. It's had chances too. And I mean, how many times have you been on the cusp of a breakout, and it just hasn't wanted to run?
I
And
have talked about Groundhog Day at least 3 times in the Tackle newsletter in the last 6 weeks.
I mean, we've been on the precipice. They've had every excuse, and we've seen the market take advantage of that numerous times over the last, I don't know, 15 years, right? And it doesn't want to. And so, as a market participant, as a market analyst, individuals that are ascribed to macro, it makes you start to ask questions, right?
The longer
About
it goes, yeah,
the
like why
longer
can't you
it goes,
break?
why are you not breaking? Right. And we thought we'd spend a few minutes before we get into our earnings update and then into stock it or drop it, just kind of talking about some of the dark clouds.
Mhm.
And one of those dark clouds, Matt,
You just
and
want
that
you just want to list out things we think are a dark cloud that the market is hesitating based on.
the market might be hesitating on.
Mhm.
And one of those, and this is one that you brought up to me, and it's when you talked about AI and AI talking, that is one of those dark clouds. The simple fact that we keep seeing headlines of job cuts related to AI. And I know everyone that is at least a little bit sentient and conscious on the issue knows
We saw
AI
some more headlines last week out of Amazon.
is going to displace a lot of jobs. A lot.
Well, let's just put it like this. Tesla is one of the biggest companies in the world. It's one of the leading EV car manufacturers in the world. Elon built his empire on Tesla, EVs, EV credits, you name it. Last week, Elon pivoted his entire company from EV manufacturing into AI hardware robotics. His entire company, they pivoted to AI robotics. Now, say what you will, and people have a lot of opinions right now on Elon Musk. And obviously, I have some complicated thoughts myself. Um, but he is a visionary genius from a technology perspective. And when he looks at the environment, he's thinking about where we're going, not today, but where we're going 5, 10 years from now. Why would somebody like Elon pivot EV car manufacturing into AI hardware and robotics over the next 5 to 7 years? Because over the next 5 to 7 years, you are going to see in America the elimination of the entire manufacturing base from a labor market perspective. You're not going to see the end of manufacturing in America. In fact, quite the opposite. We'll see an increase in manufacturing in America. In fact, you'll probably see a big increase in manufacturing in America. In fact, a lot of manufacturing that has been outsourced for 40, 50 years to cheaper labor conditions and then imported back into the United States through cheap trade agreements, that's kind of ending. That's kind of ending. We see it on the tariff side of the equation, but we also see it through automation and robotics. And so what Elon sees is over the next 5 to 7 years that the entire evolution of how we handle manufacturing in the US, which has been consistent for about 150 years now, ever since, well, probably really 100 years, ever since Henry Ford put the conveyor belt together, but is kind of ending. And what's going to replace it? Automation, robotics. And Elon's making a massive bet on that. So
And not just not just a bet. And you said this in the lounge earlier. Not just a bet on his company, his legacy.
his legacy. It's one of the reasons why I have respect, because unlike other tech billionaire counterparts like Jeff Bezos, who's just putting shiny objects on his arm and trying to live the lavish lifestyle and quite frankly pissing his legacy down, Elon's doubling down on it and saying, "Nope, I'm not done. I'm not done. I'm going to keep pushing. I'm going to keep pushing." I think it's very telling when somebody like that shifts their entire company in a strategic shift. I thought it was a good decision for a couple different reasons. Not that EV is not part of the future, but part of what made Tesla fantastic is EV credits. That's what led them to the path of profitability at Tesla. And our society's kind
Which
of moving
many a
away.
bear they loved for years, trying to poke holes. It wasn't for the credits.
Tesla's terrible. It's a
If
Ponzi
it
scheme,
wasn't
but
for
they
the
get
credits,
$1 billion in credits. And it's like, yeah, they did. And that's what Elon's smart. He got the credits. And, obviously that's kind of shifting now. And so I think it's a smart move and plus, I don't think Elon can keep up with the Chinese EV evolution, not with where the American consumer versus the Chinese consumer is on that. So I think he's seeing a little bit of writing on the wall on where the American consumer's going and the American government's going. And then he's looking at the economic environment and the AI environment, and he's saying, you know what? Let's pivot now and position ourselves full strength to AI hardware and robotics, and we're going to put Optimus on scale. And so, is that a concern that people should have regarding the labor market? 100%. Absolutely. How you see life will be fundamentally different. How you see currency, how you see labor, how you see prestige, how you see reputation will all be different as robotics takes over the labor market. And so, is that a concern? Yes, for America, for people, we need to make sure that we have answers to those very important questions, but is it a concern for the market right now? No, because for the market, that's not a concern. That's an increase in profit margins. And so the market sees that conversation fundamentally different than people do. For people, it's a net negative. For the market, it's a net positive. And it's again, kind of the market at one point was seen as a lens that everybody in America participated. That's not the case any longer. The market should not be seen as a gauge of the viability of the economy in general. The market should not be seen as a gauge for the viability of 70% of the consumers in the economy for certain. And so when you look at the market and profit margins are going up, well, if profit margins are going up, it's because how much money they are, spending in terms of the production of their business, i.e., labor, is going down. And so the concern is on the human interest side of the equation, and I have deep, 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 deep concern there. I do not share that concern as a trader and as an investor.
is there anything else going on with the AI trade itself, right? Because we've seen.
Valuation concerns. And I do think that's been a dark cloud since last quarter. The Nasdaq and the ES, ever since those valuations concerns kind of brought to the forefront, the Nasdaq has not gotten above where those started happening last October, and that's where you had earnings season
And
and
valuation, let's make no
so
bones about it, is quite high.
we're starting off the second highest, most valued market in the history of the markets, only surpassed by the dot-com markets going into 1999. So, yeah, valuation is high, and it's specifically high on the AI trade. So, the ultimate question is, can growth outweigh valuation? And for the last 4 months, it hasn't. However, you come in and you look at Meta last week. What was the difference between Meta and Microsoft last week? Meta, we're talking about a big pump going on. Microsoft, we're talking about a big dump going on. What's the difference? The difference isn't on valuation last week. The difference was on Meta said they had growth and Microsoft missed on growth. That's the difference. And so, can growth outweigh that valuation? And so far, um, up until last week, I don't think you could have made the case that growth was better than valuation. But EPS blended growth, which we use a tackle to help us kind of track that overall growth situation in the market. When you look at EPS growth last week, it had a sizable jump on the backs of some of those beats in the market. Lam Research, I'm looking at you. Meta, I'm looking at you. Apple, I'm looking at you. Sizable beats out there had blended growth go to 11.9%. And then you take just to give you a recent example on one stock, hasn't Palantir, Mark, been one of the case studies for the valuation concern in the market recently?
Yes.
Okay. And Palantir, as such, has really not been part of the conversation recently. Well, Palantir just reported earnings tonight. And you know what? The valuation, let's look at Palantir's valuation coming into the report here today. The PE ratio is a whopping 345. Like that is very high valued. And that's one of the reasons Palantir really hasn't
I'm
done
pulling out
much in
my
the last.
Warren Buffett book on valuation, and he says, yeah, that's high.
It's 18 times too high. Yes. Okay. So why is Palantir getting a massive bid on their earnings report today? It wasn't because they had such an outlandishly good quarter, right? And I'm not saying their quarter was bad, not in any capacity. Let me go look at the numbers very quickly. I did them earlier today, or early right before we got into the podcast here today. But when you're looking at their numbers on Palantir, okay. So Palantir came with an 8% beat, 6% beat on revenue. But Mark, they had a 16.2% increase in guidance. And so what happened today? All of a sudden, you have a growth narrative on Palantir. And you know what everybody and their dog's going to talk about tomorrow? Did you guys see that Palantir report? Oh my goodness, they had a 16% increase in guidance. They beat everywhere, pulled off the hat trick, had a wonderful report, and all of a sudden you're talking bullish. And yet the valuation is not going to contract that much tomorrow. Now, I think it'll be a little bit better on the PE ratio tomorrow, but slightly, I'd say. So the market ever since last quarter has had a problem getting into a growth argument. And I think one of the things on the AI trade that is extremely, extremely important this week, we have not we have not closed above 26,000 ever on the weekly chart. We have major AI catalysts this week, including Palantir that just came through. Are we above 26,000 by the end of the week? Because if we're above 26,000 by the end of the week, I highly doubt you're going to see a lot of ink spilled on valuation concerns. And so, has valuation been a concern? Yes, it's been a concern because there's been 14 other dark clouds that were out there because we put some post, some tweet, some policy, something that people got concerned about. And then that obviously, as those concerns started becoming bigger and bigger, all of a sudden these dark clouds start getting bigger and bigger. But why haven't those dark clouds seen the market crater against those concerns? Well, because are they real? Are they not? I don't know. What I do know is the earnings landscape was pretty good last quarter. And even though we didn't break out, we certainly haven't sold off. And even though we haven't sold off, we haven't broken out. And the earnings backdrop's getting better and better. So if earnings comes through this week, I'm willing to bet valuation becomes a secondary concern. But as of right now, it is a concern in the back of people's minds.
What role do you think old Trumpy is playing in all of this?
Too
Because Trump,
much.
yeah,
Whatever
because
it is too much.
you
It's
know,
it's too
there,
much.
the European thing would have been a true escalation on the tariffs. There are long-term ramifications for that. We've seen that in the imports. Already we've seen data showing a decline of imports into Europe from the United States.
Yeah.
We've seen tariff deals between other countries, right? We've seen like, and just to be frank, we've seen disruption come out of Trump, and a
The flood the
propensity.
zone strategy that Trump has used so successfully for a very long time is not working when you use the market as one of your sledgehammers. And I think I think it's getting heavy on the market. Um, I personally believe we would be up probably 5 to 7% without all the hypothetical conversations we have based on hypothetical policy or proposals that we see on social media that really don't have a sizable impact long term because they're not really real to the financial world. So for me, as a market participant, I want to have one conversation this week. Unfortunately, I think we're going to have about 14 different conversations this week, but I want to have one. And that
You want it
one
to be earnings.
conversation is earnings. Does earnings, because if the market fixates on earnings, they're going to be able to offset any concern they have because the earnings backdrop is getting better, not worse. And this is going to be the sixth consecutive quarter of good earnings. And so if the market laser focuses on earnings and it doesn't have other dark clouds to worry about, yeah, I think we're breaking out and we're running here. But it's very hard. And I say this quite a bit recently, but it's very hard to project 2 to 3 days out. Part of that being very difficult to project 2 to 3 days out is what's the next political scandal we're going to have to deal with. And I don't mean that from an administration perspective. I mean in general in the United States right now. What next political debate that the entire US is going to get indoctrinated with? And so, as a market participant, I think the cleanest market environments are ones where, the president, the administration certainly has their pulse on the scale here, but I kind of feel like the gorilla is on the scale right now and probably needs to allow the market to breathe a little bit here.
Yeah, and what do you think about the midterms coming up? Because one of the things, and once again, I'm not terribly bullish right now. I'm probably the least bullish I've been in a while. I'm not bearish. I don't have hardly any.
No, I'm not bearish, but I'm certainly like keenly waiting on a breakout here.
Uh,
I mean, it's been
I'm
6 months.
I'm waiting on a breakout or a collapse.
But the thing is, Mark, I don't know if you're going to get a collapse because earnings has been too good to get a collapse. Like, if it wasn't for outstanding earnings right now, I'd be like, ooh, let's market
But
correct here.
midterm
Like,
cycles, Matt, midterm cycles, and I've done my research on this, are prone to pretty sizable sell-offs. And it's not unsurprising that in the midterm cycle, and now every year you can have a sell-off, and every year has some level of correction almost, right? But like it's not unsurprising because there's oftentimes this gravitation to the center, there's policy changes. And in a year where populist politics is all the fake rage, not that they're real
I thank you for
pop,
saying fake rage because none of these politicians are populist at all. And
there's a
anybody that
couple.
tries, like, we need to start. There's too many fake populist politicians on both sides of the aisle right now.
Yeah, but some of those policy, just like the credit card one we had a few weeks ago, what's coming up, right?
But that's part of my point there on that. Is that credit card policy proposal going to have a lasting impact on the financial space in the market?
It is not
Why?
because it's
Why
not going
is
to
it
get
not?
passed.
And yet, that was one of the reasons why we broke support in the financial space. That was one of the causations of why we saw that violation is due to that policy proposal. And it took a good 2.5, 3 weeks. And everybody's blaming earnings on that. Mark, how many times did I say this isn't an earnings issue? Like I kept saying it. Like JP Morgan went down on a
You said
one
it. You
one
very
time bank charge. Like earnings. And now you're telling me after all of that is settled in, not 2 weeks later, finance is like, oh yeah, we're looking really good right now. And you got regional banks just absolutely killing it right now. KRE doing really, really, really good. So like, I just never bought that it was the banks were an earnings problem. It was happening in the exact same time frame of that policy proposal. And again, on its face, it seems like that policy proposal is a pretty good populist policy proposal. Let's cap credit cards. But you know when Bernie Sanders proposed that, what did I say? Capping credit cards is something that I would love. I'd love to help out consumer America, no doubt about it. Give them more money to spend. However, the only thing the banks will do if you cap credit card at 10% is what? The only thing the banks will do is what?
They're not going to issue any
They
more
just won't
cards.
issue credit cards. Which means the total liquidity will go down. So the policy proposal, although done with good intentions, has a negative result. And obviously, the banks called that out. And obviously, we now see that that's most likely not going to go too far. But again, it's one of those conversations people have in the moment that takes away from the real conversation. And the real conversation is earnings. It's the only conversation that actually matters outside of technical analysis when it comes to earnings season.
The midterm spooks me. It just does. I just think you're going to come. And if you think about it, Matt, that finance chart, Trump issues a proposal. Here we are. Finance is down 2.5 weeks. And how many of those have there been over the last, several months? Where
Too
yes,
many.
can finance come back up and be what? Sure, right?
Well,
But
that's
it's
without those, we're just talking about a high base with the breakout when it does it. Like, I don't think
without
people
those, we're
understand
like
that.
you said, we're up 5 to 7%.
Hmm.
Right? I think Trump's a weight on the market right now. I think
I
Trump's
think it is too.
unpredictability is a weight on the market right
That's the
now.
key right there. It's the Steve, quite frankly, it is the Steve Bannon philosophy of flooding the zone. And that philosophy works fairly well in political realms because people's long term memory isn't great in the political realms. The flood the zone philosophy is not a great one when it comes to the financial world, who loves data driven mechanical systems, algos. Like it's just the flood the zone system is getting heavy here, and so yeah, I certainly agree with that. We'll see if we can get some consistency in the
Not
silent
in you're
side of
not.
the
I
equation.
will be shocked in a
Not going to happen. It's midterms.
midterm
We're going to be
election
dealing with this all
year that
year.
you're going to get all of a sudden you're going to be
The
like, yep,
market's
no
got to
surprises.
treat it. The market's got to get used to it and start looking past the social media immediate discussions. And the only way they can do that is the market gets fixated on a positive theme out of earnings, a simple positive theme out of earnings. That can happen this week, Mark. You got Amazon, you got Google. I'm going to tell you right now, if Microsoft beats last week and Microsoft goes up and not down, nobody's talking about Black Monday on the weekend. Nobody's seeing that. Like it's just a completely different environment. So this week you had Palantir on Monday, you have AMD on Tuesday, you got Google on Wednesday, and you got Amazon on Thursday. You have those four companies. If those four companies get a positive response to earnings, we're breaking out and we're having a leg. And one for one so far, we saw that beat on Palantir. Can AMD repeat that tomorrow? Can we see that out of Google on Wednesday? Can we see that out of Amazon on Thursday? I think this is a week where we finally see the real market conversations start to take over the other market conversations that are not necessarily lasting impact. And so I think it's all about earnings this week. And that's honestly the only thing I care about.
Yeah, and one last thing, just one. the S&P since the October Fed meeting when Jay Powell came out and basically was, pretty hawkish, just not guaranteeing cuts. You've seen ever since then, well, the market's about trading at the same spot
About the
it
same, yeah.
was about the same spot as them.
Like
And you've
I think the ES is 30 points higher in totality, and I think the Nasdaq's like 300 points lower.
Yeah, and you've seen uh ever since then, you've seen some, of those future cuts priced out of the market, right? Now, the hilarious thing on Kevin Warsh on Friday is that you didn't see any cuts priced out of the market despite headlines about how
Despite
hawkish.
whatever those headlines were, guess
Yeah, he
what?
said those hawkish said
The December probability is about 2 points higher.
and
Like
Matt, the Fed
that's
came
it.
out, the Fed came out this last week. It was They met last week, right? That
Yeah.
that what that did happen, as boring as it was. But it was very
Oh
much
my goodness, I can't believe we haven't even talked about the Fed.
you
That
know
was last week.
that was last week. Well, that's how boring it
Mark,
was.
I'm going to tell you right now, I've never seen in my life, and I've tracked Fed days for a very long time. The Fed post announcement range in the S&P 500 was 20 points. Mark, there was bigger intraday ranges today on the S&P 500. There were bigger intraday ranges every day last week than the post intraday range on Fed Day. It was legitimately a snooze fest.
Yeah, and it was also a very clear we're on hold policy,
Yeah.
right? And the one thing about a market,
At least
and
till Powell's done and Warsh comes in and lowers interest rates,
oh
and
no, but
everybody's like,
Warsh
"Oh
is a
my
hawk.
goodness, how
I
does the
read
hawk lower interest rates? What's going on?" Oh,
you
really?
know,
You bought that bag of goods last 3 months ago? Okay.
and so how ever since that day, markets traded about the same, right? And once again, the Fed not cutting is not a bearish event, right? The Fed on hold is not a bearish event. But markets sure do like. Remember when Williams came out and said you were going to get a cut on that sell-off? Boy, markets sure did rebound really quick. And markets love it when they have that tailwind of cuts coming. And you don't have any priced in the next couple of meetings, right? And so
Yeah.
not a wait, but maybe not a dark cloud, but certainly not a
But
healthy.
once we get the second coming of Paul Volcker, we're definitely going to get interest rate not cuts but raises, right?
We will see about that.
Yeah.
We
Yeah.
will see about that.
I just say, like, I know you want to talk about the Fed, but I find the Fed to be silly right now.
Well, I obviously want to talk about them so much. I waited till like 45 minutes into our podcast
No,
to even
I
bring
just
them
mean
up.
like I don't know what like there's not really a discussion on the path of policy right now. We haven't seen probability shift aggressively one way or the other in weeks, not just last week, but even weeks before then. And the I'll say the same thing about the Fed that I said about the political side. The less we're talking about the Fed and the less we're talking about politics, the more we're talking about earnings.
Well, and Matt, that blended growth, have you dropped that blended growth number here in the podcast? I don't know if
Yeah,
you
11.9%.
11.9%. Now, having been in the podcast with you, every week, right? The target was 14. Those were the expectations, right? So we're better than we were, but less than where we might end up there, right? There's a lot of earnings this week.
I think last week was a sizable jump. I was expecting 10% last week is kind of what because whenever you go into a max 7 week, you know that's where all the growth is in the market. And so that's where the sizable jumps come from. But it was pretty outlandish up to 11.9%. So a massive improvement on the macro side of earnings last week. And I don't think you can expect the same sizable jump this week, but I do expect another jump this week into the 13 percentile. And then we probably fade. I would be a little surprised if we don't achieve 14% by the end of earnings season.
Yeah, well, I wish Bitcoin had earnings.
I don't think you do.
I wish they had something other than the arguments that they have currently, which
Well,
aren't holding up.
the problem with Bitcoin right now is the arguments that anybody has on Bitcoin actually has the legitimate argument right now. Like the arguments I've heard for a decade on Bitcoin that I bought into a long, long time ago was the anti-fiat currency argument. Well, guess what? Everybody's talking anti-fiat currency right now. Inflationary, all
Oh, global liquidity. I mean,
global
how many
liquidity, like
charts I
none of it's
saw where
working on
Bitcoin
Bitcoin right
tracks
now.
global liquidity until it didn't.
So either one, Bitcoin wasn't any of that. Two, something else is happening that is forcing big time wells to dump, 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 dump. Or three, the US government getting involved in the crypto space has shifted the way the crypto space works in the future.
Yeah, I think number three is, I
I
think
said this when the government announced their
you did, and
strategic. I
you
said it's
did,
going to
you
shift the
hated it.
way I did. I hated it.
I was wrong. You
How
were
do you,
right on
how do you,
this one.
how do you, like literally you take the it goes against everything that Bitcoin should be, by the way. But I just felt it removed a lot of liquidity from the environment. I felt it was going to have a negative impact over time, and I think we're starting to see that negative impact over time.
Yeah, I mean, the charts, this is one of the
It's
reasons.
almost like when the U.S. government gets involved in things, it's not exactly the best outcome typically.
What did Ronald Reagan say once? The scariest words or something in the government is, "I'm from the government and
I'm
I'm
from the
here to
government,
help," and I'm
and
here
I'm
to
here to
help.
help.
It's funny how those modern day,
That's so true.
I mean,
That's so
Reagan said
true.
that, and people loved Reagan for that,
I
right?
love Reagan for that.
But
I love
nowadays,
Reagan in
modern day
general.
Republicans are like, "I'm the government and I'm here to help." I
Yeah,
find it
and
hilarious.
I'm still the guy that's like, yeah, I don't trust
I'm
that.
here. I'm the government. I'm here to
I,
help. Why don't you want my help?
I know a
Right?
lot of people I grew up with was had the exact same philosophy. I'm grew up lovers of Reagan, lovers of Lincoln. I'm from the
Ronald
government. I'm here
Reagan
to help.
was
And everybody I grew up was like, if you're from the government, you're here to help. I don't trust you in any capacity. Those same people today are like, how can you help?
Yeah.
Yeah,
It's funny how things warp over time, but
it is weird.
it is weird. It's interesting to say the least, right? Stock it or drop it. I got some names
Yeah.
for you, Matt. Stock it or drop it. So your job is to say stock it. You like it, short term, long term. I don't care what time frame, or drop it, that you don't really have any interest in really tracking it closely at all. Big names, holy cow, so many to choose from. Let's start with Meta. Last week on earnings, I mean, my goodness gracious, to do a full run of stock or to drop it, we'd have to go through about a billion ticker symbols. Don't have time for that. So let's hit some big ones. Meta, stock it or drop it.
On Meta,
Yep.
stock it big time. Meta had a great report last week, in my estimation. Meta absolutely made quick hits when they came in with an 8% beat on EPS, 24% beat on revenue, or 24% increase on revenue year over year. It came in with an official beat there as well. They weren't done. I thought their guidance increase by 7.3% was absolutely standout. And I think one thing that Meta provided for me was a little bit of an alleviation of the CapEx conversation from last quarter till today. CapEx had been a negative for these companies on the hyperscalers, and they increased CapEx by 13% and 73% year over year. And Meta gapped up aggressively because at the end of the day, guidance is far more important than CapEx spend. And that guidance ruled the day. And so I think Meta is absolutely deserves to be on secondary radar. Pullbacks make sense, bases make sense, any secondary pattern makes sense for a lot of different tradable systems, whether it's picking up in a swing trade, more position trade, or on the cash flow side of the equation. I think secondary patterns play on Meta.
Let's go on the other M in the Mag 7, Microsoft. Stock it or drop it, Matt. Chart's ugly, but do you have any interest?
I gave thought to Microsoft on the bear quick hits, but I just couldn't do it. Number one, they came in with a beat against EPS. They also beat on the revenue side of the equation. Guidance was reaffirmed. A lot of these were lukewarm beats, but still beats nonetheless. The biggest concern out of Microsoft, and I've seen this out of Microsoft multiple other times when we dealt with major gap down sell off type behavior, is when they miss on cloud. Cloud is kind of their growth engine. And when they miss on cloud, the path of least resistance is down. And so I wouldn't have any interest picking up Microsoft against a falling knife situation. And whereas the market had a really good day today, Microsoft didn't. Like the market's trying to recover, Microsoft isn't. And so I don't have a lot of interest in Microsoft as of right now. So I'm gonna drop it, and I'm gonna drop it the same way the market's gonna drop it until it starts working the 400 by 390 support level.
Yeah, this market is very like when it doesn't like something, it doesn't like something, it does
Well, it's kind of like,
software.
software like Palantir. Like Palantir was one of the biggest conversations we had for the first 7, 8 months of last year, and then they just haven't been a part of it. Microsoft, a little bit of the same here.
Tesla, you brought them up. Elon did the shift. They also had earnings last week. It was, kind of a weird non-event, right?
Well, when you shift your entire company to AI hardware and robotics, it's going to take a back seat. But they quietly had an 11% beat on their EPS, and I was expecting a miss. I got to stock it here. I know it's a high valuation, but I'm thinking long term here, and I actually think the shift to robotics is a wise one. I think it does go beyond just Elon, in my opinion. Looking at the AI race and trying to position Tesla to be that, I think it's more than that. I think he's trying to get Tesla to the point where Tesla and SpaceX can support one another from a tech stack perspective, with robotics going into outer space, doing other things such as data centers in outer space as well. And so I think there's some of that going on, but I also think Elon sees the writing on the wall on the EV space regarding EV credits and the competition on the EV side with China, and he's caving on that a little bit, pivoting to what he sees as the much easier path, and also probably gets government support where he doesn't get government support on the EV path any longer. So I think it's a wise move. I'm going to stock it on Tesla.
Well, what about old Palantir? You brought them up. I wasn't going to bring them up but they've come up more times in this podcast than they have in a
Well, it's because they had
while.
earnings today.
You know, but
Yeah.
what's your take on old Palantir? Not even a stock and drop, but just what's your take here? Like, what would you need to see in in development wise?
Deeper bearish retracement followed by a bear stop out pattern around 165.
Okay.
I think it's a tradable situation for me. I don't think like the valuation is too high to entertain longer term, in my opinion. And so for me, it's
So
going to
trade
be
setup if it develops.
it's going to be a trade setup. And so just based on the price response here, you can expect somewhere around 160 to 165 tomorrow. And again, it depends. We're at 154 right now, but you should see a gap up. But that gap up, I mean, you got to develop here. You can't just gap up and chase a bearish retracement gap. So gap up, work into 165, give us a nice little high base going into that. That'll make some sense. But it's going to be a trade setup secondary pattern off earnings.
All right. And the last one I had is just a darling, so semiconductors so hot as what was that movie? Will Ferrell and Zoolander, so hot, semiconductors.
What was that though?
LRCX. LRCX.
You're talking about put some respect on that name. Um, Zoolander 1, yes. Zoolander 2, no. So yeah, LRCX Lam Research here. What am I going to say about this company that Tackle doesn't already know? Um, it's one of the most popular companies at Tackle Trading. It's been that way on the position cash flow side of the equation ever since we were talking about this company last year going into this year. I put it on the Tackle 25 last year. And even when it was going down, we're like, oh, start accumulating because it was a fundamental darling. They had earnings last week as well. They pulled off the hat trick, beats everywhere. The only problem with the Lam Research is they're constantly overextended here. And so it's just technical navigation more than anything. But Lam Research is a wonderful, wonderful company, and they're obviously on both the Tackle 25. They're also on the AI Gold Rush as well, and so they're a very popular company at Tackle Trading. And their earnings did nothing besides make us like them more.
Yeah, well done. Well, dude, brother, Matt, I've enjoyed the podcast. I thought you had some fantastic analysis today. Fantastic
Appreciate that.
analysis today. Send us out, brother.
Yeah, if you love the podcast, best way to support the podcast, give us a nice little like and share. Tell somebody about it. Put the good message out of the Trading Justice podcast into the ears and eyes of other people out there as well. Much appreciated. Also, just want to give a shout out to our community. Love our tackle trading community. And if you need anything from us, obviously hit us up in Discord. Team at Tackle Trading is the email you can get to us. But the number one thing I love about our community is hanging out every single day in the Traders Lounge, talking to our community about what we're seeing in the market. A lot of people got caught off guard on that volatility on Friday, but if you were in the Traders Lounge on Wednesday and Thursday, you did not get caught off guard on that volatility on Friday. We have that conversation every single day with our pros in the Traders Lounge in our tackle trading Discord. And so if you're interested in coming and joining our Discord channel, hanging out in the lounge, navigating on a day in, day out basis with the best community out there, well, hit the link in the description below and become a free trial member of Tackle Trading Pro membership. You can get a free trial on us just by hitting the link in the description and come test it all out. See if you like it. If you don't, no harm, no foul. With that said, I hope everybody has a blessed and wonderful, wonderful week, and we'll see you next time.